Look around at what is happening today. The market is hitting record after record. S&P 500 is soaring, the tech-heavy Nasdaq is breaking records, and the crowd is celebrating like this party will never end. Retail buyers are panicking, shoving their last savings into the stocks at the absolute peak because they are terrified of missing out. But let me ask you a serious question. What happens to the herd when they rush into the dance floor right as the music is about to stop? Right now, raw data spanning over 150 years of stock market history shows us that this bull market has officially reached its tipping point. While the mainstream media pushes the hype, the cold numbers prove a massive market downturn is inevitable. If you want unfiltered true, not emotional reactions, but historical facts, listen closely. Because while the unprepared crowd is about to lose their shirts, the disciplined investor is prepared to make life-changing wealth. To understand exactly how dangerous this moment is, we have to throw away the hype and look at how we measure the stock market's true value. Amateurs only look at the basic price to earnings ratio from the past year. That is a massive trap. Real investors look at the Shiller P ratio, also known as a CAPE ratio. Let me explain this in a very simple way. Think of this like a sugar rush. Imagine you ate a giant bag of candy or drink 3 energy drinks. For the next 30 minutes, you're running around with massive energy, feeling like you can conquer the world. If someone measures your heart rate and energy levels in those 30 minutes, they might think you are the healthiest, most energetic person on earth. But that is a complete illusion. You are just on the temporary sugar high. Soon you are going to crash, and you will crash hard. A standard PE ratio only looks at the corporate earnings from the past 12 months. It is just a snapshot of a temporary sugar high. The Shiller PE ratio, however, looks at the corporate earnings over the full 10-year cycle, adjusted for inflation. It measures the market's true long-term physical stamina, stripping away a temporary sugar highs of the economy. Let's look at the historical data. Going all the way back to the year 1880, the historical average Shiller PE for the American stock market is only 17.4. Right now, the Shiller PE has blasted past 42.8. Let that sink in. Stocks are trading at more than double their long-term historical value. In the last 150 years, the market has crossed the level of 40 only twice. The first time was in December 1990, right before the dot-com bubble burst and wiped out of the trillions of dollars, crushing the Nasdaq by nearly 80%. The second time was right before the market reset in late 2021. Today we are just a tiny fraction away from the breaking all-time 99 bubble records. By buying stocks right now, you are paying the most expensive prices in modern history. The loudest argument right now from the crowd is, but this time is different. We have artificial intelligence, AI is changing the world, and those companies are making real money. History has a brutal, timeless message for that argument. Every single time humanity invents a revolutionary technology, the market builds a massive bubble around it. And that bubble always pops. In 1999, the revolutionary technology was the internet. The crowd claimed the old laws of math and economics were dead. The internet did end up changing the world completely, but because of the stock prices were driven by the pure hype, the market still had to crash and reset. Outstanding companies like Amazon crashed by over 90% before they recovered. Look at the AI boom today. Yes, the massive tech leaders driving this rally, like Nvidia or Microsoft, are real high profitable powerhouses. They are not the empty tech husks of 1999. They actually have the real earnings. But the market had priced their future growth so perfectly that there is absolutely no margin for error. The second the earnings report shows that the AI infrastructure spending is slowing down even a tiny fraction, the herd will flip from the absolute greed to absolute terror. The stock market behaves like a pendulum. The harder it swings into the overvalued insanity, the harder it will snap back when reality hits. Do not get me wrong, I'm not telling you this to scare you. I'm the long-term disciplined investor, and I'm a massive believer in the standard S&P 500 index fund. It is the single greatest wealth building machine ever created if you use this correctly. Look at my own portfolio proof on the screen right now. My long-term core position in S&P 500 index fund has brought me over 90% return, over 90% profit, achieving simply by staying calm, ignoring the noise, and letting compounding do their heavy lifting. But the difference between my strategy and amateurs buying on the highs today comes down to the timeless rule of contrarian investing. When the market goes up this fast on the pure emotions, it has to calm down and you must protect your capital. People see my historical wins, like locking in a massive 275% gain of Intel by buying when everyone else claimed it was dead. And they ask me how to time the market. The answer is simple. You don't time the market. You practice patience, you ignore the herd, and you keep your ammunition ready when the market fluctuations give you a real, undeniable discount. So right now, while the stock market is at absolute crazy heights, I'm doing something that makes ordinary investors incredibly envious. I'm not chasing the tech rally. Instead, I'm accumulating cash and holding it ready in my brokerage settlement fund. While other buyers are completely tapped out, investing every single dollar they own at the maximum prices, my cash settlement account is locked, loaded, and waiting. The money is not sitting there losing to inflation. It is waiting for blood on the streets. When the market downturn hits, and according to 150 years of data it will, the herd will panic. People who bought at the Shiller P of 42 will watch their portfolios turn deep red, lose their minds, and start selling elite world-class companies for pennies on the dollar just to stop the pain. That is the exact moment I'm waiting for. That is when I will deploy the cash I have saved on my settlement account. I will step into the crashing market and buy high-quality assets at the massive 30, 40, or 50% emotional discount. Real multi-generational wealth is not made by following the crowd to the top of a bubble. It is made by sitting on the mountain of cash, staying patient, and buying from the crowd when they panic at the bottom. The question to you is right now, when the crash happens, will you be one panicking with the overexposed portfolio, or will you have the cash ready to buy the sales of lifetime? The historical data from the last 150 years is clear. The current market levels are completely unsustainable. The tipping point is here. Do not let greed blind you. Build up your cash reserves and wait for the market fluctuations to bring the prices back to reality. Remember, I'm a simple private investor, not the financial advisor. This video is strictly for educational and informational purposes. Do your own research. What is your play right now? Do you think that AI boom justifies the Shiller PE over 42, or are you building up cash like me? Drop your thoughts in the comments below. If you want to follow disciplined raw data approach to the market, hit the like button and subscribe. If you hate it, hit dislike. And never forget the most important rule on this channel. Take care of your health, because your health is always the biggest wealth. You can make a 90% return on your S&P 500. You can secure 275% turnaround profit on the stock, and you can fill your settlement account with cash. But if your body and mind are broken, those numbers on the computer screen means absolutely nothing. Get away from the chart exercise, eat clean, and take care of yourself first. Thank you for your time. Stay disciplined, and I'll see you in the next video.